Hi, today we're going to be talking about IPOs, initial public offerings. Toward the beginning of the year or the first 6 months of this year, there's been very little activity for IPOs, for SPACs or special purpose acquisition companies, mergers and acquisitions. Things have been very slow. But now it looks like toward the end of this year, there may be more activities in IPOs. Today, what we're going to do is we're going to discuss what is an IPO. We're going to talk a little bit about how they work, and we're going to talk a little bit about the history of IPOs, and maybe if you decide that's what you want to invest in, this might help you. So an IPO is really basically a way a company, usually a private company, goes public, but there are exceptions. There are spin-offs which can become IPOs, which we're going to talk about later. Okay. Now, IPOs require very stringent government policies. They're not that simple to implement, and we're going to talk about that a little later. Again, the purpose is to raise money. The way you would go about it is one would hire an investment bank. The investment bank's job is to do diligence, which means they make sure that the documentation that you're providing or provided them to be publicly listed is accurate. They do all the digging. They will also do what is known as roadshows, which means they will go out, they will promote your IPO, they will find people who are interested in it, and they will sell it. They are also responsible for marketing the IPO as well as underwriting. They may have some role in the banking and the finance, but they must have industry knowledge of that. Now, when you receive a stock from an IPO, it's really the secondary market, and that's what's meant by that. Let's just take a moment to talk about how you get to the point of getting an IPO. When I say getting, I don't mean buying, but how a company gets to the point that they're able to issue an IPO. There are various rounds. The first round is obviously the initial funds put in by the initial founders or founder. There's a business plan. There's usually funding from friends and family initially. Then an angel investor would come in. They would write a private placement memorandum which would allow you to go out to get funding from other people. And that's pretty much how the process works for a company that's going to eventually go public. The investment team background, your board of directors, all that type of stuff needs to be in there along with the term sheet. The history of IPOs, the first one I could find was about 400 years ago. It was in Holland. It was the Dutch East and West India Company. They probably even today were, or could be, the largest company that ever existed. They were the first to sell stocks, the first corporation known at this point. Some of the pending, as we said, things are getting better second half of the year. We're looking at J&J spinning off, or Kenvue, J&J Kenvue situation, where that will be offered to the public as an IPO. Not all IPO works. There's been success from like Sony Aramco, Alibaba, SoftBank. They've done well, but there's been some that failed, and when I mean fail, what I mean is they may have not been properly priced to the public, like Uber or Facebook. They weren't priced properly, and the initial investors prior to the IPO didn't really get what they could have gotten if it was priced properly. So it's very important. How do you get one? Where you hire a broker? You can do it online. You have to meet certain requirements. You place the order. That's how the process works. But it's fairly straightforward. There are alternatives to IPOs, such as something called a SPAC, which is a special purpose acquisition company, which is like a shell company. You can get into the market that way. Now there are ICOs, or initial coin offerings, where you can get into some company in the crypto world, such as Bitcoin or whatever you like there. Obviously, the advantages, the responsibility of the IPO is to raise as much money as possible at the best rate, closest to the offering price. IPOs are extremely expensive. That's why people consider using SPACs or some other way to bring their company to the public. It's a complicated process, extremely regulated process that's involved in it. So the reason why we haven't seen much of IPOs this year is because of the economic climate that we're in. But it seems now that the second part of 2023, there seems now to be more of a demand for IPOs. Thank you very much for your time. If you enjoyed the video, please give me a thumbs up, please subscribe, and have a good day. Bye.